Securities 98.1.
Smooth 98.1, love music, love life. If you just joined us, it's time for Business Express 981. And of course, we're going to be having conversations with Rotus as always. So if you're out there and you want to be a part of our talk this morning, please join us on WhatsApp or across all of the platforms. On WhatsApp, it's 0809-444-0981. Also, you can reach out to us on Twitter. Use the hashtag Business Express 981. Good morning, Rotus.
All right. Good morning, Kayode. Good morning to all our listeners, and good morning to Dara Olunuga, who's an investment analyst with ARM Securities. Dara, good morning.
Good morning, Rotus. Good morning, Bakerr.
All right. So, Lagos, we're discussing inflation. Inflation figures came out yesterday, and Dara was, I guess, kind of surprised a few people. Inflation ticked upwards, I think 15.63% year on year for December 2021 from 15.4 in November. There's been a deceleration now for a number of months. So any idea why we had an uptick in inflation for December?
So, like you mentioned, we've seen a deceleration, especially in the second half of 2021. And analysts usually allude that to a high base effect, coming from 2020 when, for the food supply chain, there was a disruption as a result of COVID, there were lockdowns and food prices surged. And also in Nigeria, we had a double hike in PMS prices, to reflect current realities. And we also saw an electricity tariff hike in the country, which all pushed inflation higher in 2020. So the base effect is what we've seen helped slow the pace of inflationary growth in the second half of 2021. So it's not as if prices were not growing, but they were growing at a slower pace compared to the previous year. And since the basket measures a year-on-year change, that's why we saw that deceleration. But surprisingly, in December, against analyst forecast, we saw an uptick in inflation numbers, to 15.63 from 15.4, and it was majorly a food price play. So if you notice, the core basket just inched higher by 2 basis points marginally, but the food basket rose by 16 basis points, to about 17.37 in December alone. There are two things to allude this to look for. Number one, December is the month for higher food purchases, charity donations, company donating food, giving out food to employees, and large purchases, large importation. And this is even evidence if you see imported food inflation also increased in the month. To further allude to the fact that there was a surge, and compared to last year, when inflation baskets compared year on year, we now have a weaker currency which has been depreciated in the year, which is also going to put a lot of pressure on all of these purchases. Higher food oil prices, higher transportation prices, all feeding back to the food basket. Another thing is the fact that I think that insecurity is also pressuring the food basket, because farm produce inflation also surged both on a year-on-year basis and on a month-on-month basis, despite the fact that we saw, lesser flood, the milder impact of climatic change on food production volumes. So I think imported food inflation, further triggered by festive-induced purchases, and also, an increase in food produce prices because of insecurity pressures, majorly drove food inflation and hence end-line inflation in December.
Excellent. Thank you for that breakdown. Month-on-month inflation, though, that hasn't been falling as much as, or rather, not hasn't been decelerating like year on year. Is that a more accurate gauge of price movement if we look at month-on-month inflation?
Yes, so that is a more recent trend. Like I mentioned, inflation, the headline, the year-on-year figures measures from now till last year. And, a lot of things have changed in between. So when you look at month-on-month, it's comparing what happened in December relative to what happened in November. The headline inflation alone moved by 74 basis points from November to December, so about 1.82. And food jumped by over 100 basis points to 2% in December alone, showing that month had a significant impact on the numbers, on the purchases had a significant impact on the numbers for that month. So month-on-month inflation usually tracked for more recent trend. That's why you see investors, when consumers complain that how can inflation be slowing when prices are actually surging in the market? So month-on-month inflation more reflects an accurate picture of that.
Wow. So what does that mean? I guess, we've talked about these numbers. For the average Nigerian, what does this mean?
It means that the prices that are going to be buying products now is going to be more, than what they did last month or they did last year. And if you are a consumer that is conversant to the market, you notice that for every time you go to the market, you have to top your budget. You have to expand your budget, because by the time you get there, something that was 1,000 last month is now 1,500. And some people rather blame the people, marketers, and be like, they're just hiking prices. Oh, it's just they think it's December and people have money. No, so prices are higher, and it continues to feed into everything. So because prices are higher, your transporters will increase the price of transport, because they are also buying that product at the higher prices, and that transport price will still feed back into the food prices. So it's a cycle. It's a vicious cycle that we are in. So it keeps feeding into each other, and the prices keep rising on a month-on-month basis. And now we have PMS prices that are higher. We have electricity tariff that we saw a subtle jump again in December, without any announcement, with an expectation that we're still going to have deregulation and electricity tariff hike. That's provided that the political will allow it as we approach the general elections. So what it means is that you have to keep expanding your budget as a consumer, and you have to be conscious of what you're investing in as an investor.
Thank you for mentioning investments, because I was going to ask you about, what this means for the real rate of return for securities then.
So what it means is that if inflation is at 15.4%, as an investor, you shouldn't invest in an instrument that gives you less than that. There's something called a real return on investment. It means that you should subtract the inflation rate in the country that you're investing in from the rates that you're getting from any investments in that country, including your savings account. So if inflation is at 15.4% and you're investing for like 11%, that means you're in negative net when you subtract inflation. And it means that you have to be conscious of your investment decisions. For instance, in advanced economy where inflation is like 2%, 3%, you can afford to invest at 3%. You can afford bank deposits. But in a climate as ours, that we have 15.4%, it means you have to be more creative about your investment options, and you have to be more concerned about your investment wallets, because it means that what you're buying for 1,000 today, what your 1,000 is buying today, you have to spend like 1,500 or 1,000 in the next 1 year. Now what your 1,000 had bought in December 2020, it means you have to spend like 1,200 naira to buy it in December 2021. So it means that now for your investment, you shouldn't do the same. You shouldn't just leave your savings in the bank and just say, oh yes, I'm earning return and it's secure. Now, this is not investment advice. You have to still work with your investment advisor to look at your risk appetite and what your willingness and your ability to take risk. But it means that you have to be conscious. You have to ask conscious questions, and you have to ask intelligent questions and intentional questions. How much am I going to earn on this on a per annum basis and on an holding period return? So, for instance, if I'm telling you that an annual return for an investment is 36%, and you're investing for 3 months, you should be expecting a 9% return. Do you get? So, as you're looking at your investment on an annual basis, look at it on an holding period basis and see if you're actually beating inflation or inflation is destroying your consumer wallet.
Thank you very much.
Thank you for
Tell
that.
you what, Rotus, just before you move on to your next question, let's take some of the messages here. Here's one from Bakerr. He says, when we already have higher prices for food, will we not be yampepe scatter when subsidies and oil are removed this year? Inflation will head for the stars. He further says, I also heard on the news that there are a million bag of rice pyramid exhibition, somewhere gains of the government's investments in the sector. So he says, after the photo ops, should they let the rice flood the market so that prices can be moderated? I guess that's what he's trying to say. Okay,
yeah, we talked about this yesterday. There's they are unveiling a rice pyramid in Abuja. They're talking about the Anchor Boras program, the gains that they've made in rice production, and that's what he's referring to. So that's taking place today. The president, central bank governor, a number of other dignitaries are going to be there. But yeah, what people have been saying is that they want to see the corresponding impacts in the price of rice. And Bakerr's point is well made. Dara, is there any portfolio mix that can hedge against inflation?
So, like I had mentioned, you need to invest above inflation rate, and you have to look at investments that offer you that. Now, this is tough in an economy like ours, where the fixed income investments that should be, the most secure investment is offering like 13% at the longest end of the curve. That's they are buying the 30-year bond for 13%. So, as a short-term investment or an investor that just wants to, get in for 3 months, probably between treasury bills at 2-3%, which is, a wider negative real return yield when you look at it compared with inflation. So for fixed income instrument, of course, you can't beat that market. The only thing you can look at is if you have commercial papers, from companies that are offering above. I recently have heard of a commercial paper that is offering like 15%. Again, with the consideration of the credit rating on that borrower. So you're not just going for higher yields and ignoring credit rating that might, where there might be a case of default and you not even get principal and interest as and when due. So investors should be more intentional with all these investments. When you have your fund, liquidity is essential because all of these commercial papers are not they are not scheduled according to your timeline. So they just come up and you have to put in a bit of money in those investments. So for the fixed income market, that is advised. Coming to equities, normally theory says equities and inflation edge, but not all equity instruments are inflation edge. So you need to look at companies that are offering services and products that the demand is pricing elastic, meaning that they are able to pass on the cost to consumers without losing volumes when inflation rises in the cost of production. Now, a lot of these inputs have been added to the import ban basket of the CBN. Maize, sugar, and all of that can no longer access foreign exchange. So, as prices are increasing and they're buying at higher prices, can these companies pass on the same cost to, consumers? Now we have the excise duty for carbonated drinks or sweetened drinks. That's another 10 around each bottle. Are these products priced inelastic? Do you expect these companies to still make increased volumes and revenues despite increased prices? That is what you should look out for in equities. Now, real estate is also one. I don't know what kind of investors you are, but real estate has also proven to be an inflation edge because if you, as somebody that taking an apartment from the landlord in Lagos, observe they are able to pass on cost to consumers. If anything increased, the landlord should give you a notice at the end of the year and say, my price rating is going up by 50%. What does that mean? It means that rental income adjusts with inflation. So depending on the kind of real estate investment, there are diverse ways to get into the real estate. There's REITs, that's the real estate investment trust. There are companies, real estate operating companies that you can invest a certain cut of you don't have to buy the entire building for whatever building you got for. So if you can get into real estate investments that use rental income that adjusts with inflation, that will also be another edge. Another thing is to look out for foreign investments. So in economies that have saner inflation numbers. So if you're investing in Eurobonds, for instance, you don't have to invest in Eurobonds directly because the minimum investments can be high. So you can invest in Eurobonds funds that are performing well. And we have one at that like ARM, so you can contact us. We also have, you could buy foreign stocks, foreign equities through all of these platforms that are up and doing. You can buy instruments in your favorite company, your favorite telecommunications company, or your favorite media companies in foreign currencies. What it means is inflation in these currencies say for COVID has disrupted a lot of things. Inflation in this long-run inflation in these countries are much more stable. They are able to earn a return that exceeds your dividend yield alone will exceed the inflation numbers in some of these stocks. So those are the investments that I think are advised for an investor. But please speak to your investment advisor about your risk appetite and your limits.
Thank you so much.
I do have to mention, I know we're out of time, Kayode, but real quick, the armstocktrade.com, at least for buying equities and securities here, you guys can check out armstocktrade.com. Dara, thank you so much. Very, very in-depth conversation on inflation and what solutions on what to do. Oluwadara Olunuga, investment analyst with ARM Securities. Thank you so much. Really appreciate it.
Thank you for
Thank you so much. Thank you so much, Dara. Thank you so much, Rotus.
Thanks, Kayode.
Yes, thanks, guys. Thanks, Lagos. There's more to come in a few more minutes. Don't forget, we're going to be taking